Welcome back to The Explainer. Today, we're jumping straight into the absolutely fascinating, honestly almost magical, mechanics of the 19th century Rothschild financial empire. We're going to break down exactly how a family from a locked-down ghetto built this incredible private intelligence network and an early international central banking system that fundamentally shaped the modern financial world we live in today. Okay, let's kick things off with what I like to call a historical magic trick. The year is 1815. It's June. Financial markets are just intensely anxious about Napoleon Bonaparte's final campaign. British government bonds, known as consols, were directly tied to the outcome of this conflict. If Napoleon won, British bonds would completely collapse. But if the Duke of Wellington won, they would absolutely skyrocket. The tension was palpable. Whoever knew the outcome first held the keys to immense wealth. Now, to outsiders looking in, Nathan Rothschild's power, it literally looked supernatural. But his real secret wasn't magic. It was a totally private network of really fast horses, boats, and couriers. See, while governments relied on slow, bureaucratic channels where a simple letter could get stuck for weeks, the Rothschilds invested heavily in their own relay stations and the absolute fastest couriers available. That ensured they received critical news across Europe before anybody else. Let's actually step through how this legendary Waterloo trade went down. Nathan, who was stationed in London, got word of Wellington's victory through his private courier way before the government did. As the story goes, he used this ultimate information advantage to begin quietly selling off British bonds. The market, knowing he always knew things first, completely panicked. Everyone followed suit, causing prices to plummet. And then, once the market hit rock bottom, Nathan systematically bought them all back up. Shortly after that, the official victory news finally arrived, and the bonds surged. Now, historians and the Rothschild archive do debate the exact details, and they push back on some of the wilder embellishments over the years, but some estimates place his profit from this single information asymmetry at up to £100 million sterling. Whether that exact number is perfectly flawless or not, this event firmly established the staggering, undeniable value of knowing things first. Section 1. Roots in the Judengasse. From the Frankfurt ghetto to the courts of Europe. Right, so to truly understand how they even built the network that made Waterloo possible, we kind of have to reverse engineer their success. Let's flash back to 1744. Mayor Amschel Rothschild was born into the Frankfurt Judengasse, which was this cramped, locked-down ghetto. Jewish families there were forbidden from farming, joining craft guilds, or moving freely. Their economic options were largely limited by Christian laws against usury to money changing and lending. It was a place of enforced poverty, yet, incredibly, it was exactly where Mayor Amschel began building his empire. So how exactly does someone break out of that? Well, Mayer systematically acquired institutional legitimacy. After doing an apprenticeship in Hanover, he headed back to Frankfurt and used a side business in rare coins to build a relationship with Prince Wilhelm. He offered exceptional quality, fair prices, and eventually secured an official appointment as a court agent. He understood that in the 18th century, a royal endorsement opened doors that mere money never could. He wasn't just building a business, he was building a position. Section 2, a 5-city financial web, the blueprint for international reach. So Mayor Amschel, he didn't just build a local business. He executed what is honestly one of the most consequential organizational decisions in all of financial history. He dispatched his 5 sons to essentially conquer the 5 most important cities in Europe: Frankfurt, Vienna, London, Naples, and Paris. This created an unparalleled web of absolute family trust. They operated with local expertise, sure, but they coordinated their intelligence as a single unified entity. No competitor relying on ordinary contractual relationships could even come close to matching this level of mutual trust and communication. And with this 5-city network locked in, the brothers became the absolute dominant underwriters of government bonds. In the 19th century, bonds were the lifeblood of statecraft, right? To underwrite them required massive capital, incredible distribution networks, and really precise market intelligence. Because the Rothschilds had all 3 of those things across 5 major capitals, governments repeatedly turned to them to raise massive sums of money quickly. Section 3. Operating in early central bank. Account transfers over physical gold. Which brings us to exactly how this multi-city family structure functioned for the whole continent. The sheer scale of their underwriting was, well, it was staggering. They financed nearly every major European power, completely impartially. Whether it was Britain, Austria, or a newly independent Greece, they provided capital regardless of shifting political borders or ideologies. They were willing to do business with any faction, really, just so long as the terms were sound and the collateral was sufficient. Let's think about how they actually processed all this massive international debt. Shipping physical gold in carriages across dangerous borders? That was incredibly slow, expensive, and basically an open invitation for highway robbers. So instead, they utilized their five-house network. If Austria owed money to Britain, the Frankfurt house would record a debit and the London house a credit. They simply netted offsetting positions across their ledgers. They were literally operating the mechanics of modern international central banking decades before formal government systems ever caught up. This centralized record-keeping system made them so structurally necessary that European leaders relied on them constantly. Just take the Austrian statesman, Prince Metternich, who absolutely dominated post-Napoleonic European diplomacy. He noted that their private financial intelligence was more crucial to his governance than official diplomatic messengers. The Rothschilds didn't dictate policy. They just made themselves entirely indispensable to the functioning of the state. Section 4. Expanding the infrastructure. The railway age and deep economic integration. Heading into the mid-19th century, they weren't just financing wars anymore. They were financing the physical infrastructure of Europe itself by funding major structural masterpieces like the French and Austrian railways, and global trade routes like the Suez Canal, which, by the way, Lionel de Rothschild financed with a £4 million loan within 24 hours. They totally embedded themselves into the daily economic life of whole regions. Think about it. A government whose railway was financed by Rothschild capital had massive incentives to maintain a very good relationship with them. This whole strategy really reveals the core philosophy of their empire. They understood something absolutely crucial. Political authority is fragile. It's so easily lost to a revolution, a coup, or a bad election. I mean, James Rothschild in Paris survived a monarchy, a republic, and an empire simply by being too important to disrupt. Financial authority, that permanent, unceasing need for states to borrow money, that endures long after the politicians are gone. Section 5. The modern financial legacy, the blueprint we still live in. As the 19th century came to a close, sure, the rise of national central banks and complex regulations changed their position. But their foundational innovations, they remained. The principle is identical across centuries. Whether you're using fast horses to beat government dispatches in 1815 or using fiber optic cables to shave milliseconds off trades today, the systematic advantage of moving information faster than the market remains the ultimate financial asset. They figured this out over 200 years ago. So what's the big takeaway here? It's that they built an empire not just on sheer capital, but on this unreplicable combination of absolute family trust across 5 cities, a rapid information advantage, ingenious central bank ledger mechanics, and sovereign legitimacy. As Mayor Amschel actually specified in his will, the family's coordinated network was their most powerful, inimitable asset. I'm going to leave you with this provocative thought about the durability of money versus laws. Whenever you see a government-issued debt today or an investment bank underwrite an offering, you are looking at a system built by a family that started in a locked Frankfurt ghetto. It perfectly wraps up our explainer on the architects of modern finance. Just think about it next time you check the markets. And until next time, keep learning.